let's start with the key movers that affected the market recently. Still, the COVID-19 continuous spread and impact on the economic recovery. It's still one of the key movers since the spread of coronavirus definitely, and it will remain there unless we have a clear vaccine with proper efficacy, and then we put an end to this virus and life gets back to normal. Until then, this will definitely continue to weigh on the market. We're seeing soaring numbers around the world, which would definitely just threaten the economic activity, especially during the holiday season. COVID-19 vaccines, we're now just awaiting some, as we heard in the news, that the UK just approved using the COVID vaccine, and they will start applying it to people this week, while we're still awaiting the confirmation from FDA, which will come soon also this week, and this could also have an impact on the market. We have already the vaccines that were almost like showed proper efficacy: Pfizer and BioNTech, AstraZeneca and Oxford, and also Moderna. So these are the vaccines that we're currently just waiting for some approvals for them to be used. Also, there are a couple of vaccines that are just being tried. So until then, we stick to these three. Brexit talks continued also to have an impact on the market. Last week, we had a bit of optimism over reaching a deal over the relation between the United Kingdom and the European Union following the Brexit. However, today we have some headlines showing that there is no progress yet, and this is just adding some pessimism, and we're seeing its impact on the British pound, which is falling to almost 32.20 from 35.40 high, the highest since 2018 on Friday. The Reserve Bank of Australia monetary policy meeting took place also last week. The bank just kept its policy unchanged. Interest rates remained at 0.1%. Also, the cap on the 3-year yields continued. Definitely, most central banks, they're just monitoring economic data. They're just ready to interfere if the recovery just have some headwinds, but also they're currently adopting a wait-and-see tone. Powell's testimony also, he testified for 2 days on the Fed's response to COVID-19 impact on the economy. So mainly he just stated that the economy recovered well, but still we're there is a long way to go. So this is just these were his key remarks. The U.S. jobs report, which came out on Friday, showing that the U.S. economy created 245,000 jobs, way less than expected. The unemployment rate fell to 6.7% from 6.9%. Some of you might think that this is a positive thing. The unemployment rate fell. However, if we look deep into what happened, we have a look on the participation rate, meaning the people who are participating in the labor market. The percentage fell to 61.5 from 61.7. So people that are looking for jobs, they just got lower. So this is also what supported the unemployment rate to fall this 0.2%. Also, another key component of the jobs report was the average hourly earnings, which also rose significantly on month-to-month basis and also year-on-year basis. This is just triggering some concerns on maybe we could be facing inflation faster than anticipated. So this could also force the Fed to just reconsider low interest rates. So this is just for the longer path, medium term, we can just start looking at these headlines, since they will be definitely at the time, these headlines will be affecting the market. So any headlines regarding inflation, among them consumer price index, which will come out on Thursday, PCE, which is one of the key gauges for inflation for the Federal Reserve, consumer spending. So all these will have to weigh on the market. They will weigh on the probabilities of keeping policy unchanged for a while. So this is what could come and play in the future in the coming weeks. So these were the key movers for the past week. Now we're going to highlight the top economic events to come later this week. So along with the Brexit talks that are still taking place, we have the economic indicators. So tomorrow we have from the Eurozone, the German ZEW Economic Center, which is expected to rise to 45.0 versus 39.0. This is just on the optimism of having a vaccine, and which could just raise the sentiment and whole investors' hopes. So this just could could be the reason behind the better reading. Also from the Eurozone, we have the final reading of third quarter GDP, which is expected to come at 12.6%, similar as the second reading. Also from the United States, we have the American Petroleum Institute weekly crude oil stock. Moving to Wednesday, we start with the jobs opening from the United States, which is expected to fall to 6.3% from 6.436. Also from Canada, we have Bank of Canada interest rate decision. The bank is widely expected to keep policy unchanged. Any remarks on the outlook could have an impact on the Canadian dollar, which strengthened significantly during the past couple of days. The crude oil inventory is also from the United States, which is expected to fall by 2.358 billion barrels. Moving to Thursday, we have a series of economic indicators coming out. Among them, the gross domestic product, the GDP from the United Kingdom month on month, expected to show that the UK economy grew by 0.4% versus 1.1%. Also, the manufacturing production and the industrial production from the United Kingdom expected to show an expansion by 0.2%, 0.3% respectively. Also on Thursday, one of the key events, the European Central Bank monetary policy meeting. Definitely there could be, like in the past meeting, the President Christine Lagarde highlighted that there could be some changes to the monetary policy, especially with the latest headwinds to the economic recovery. We're seeing some economic indicators in the Euro region dropped in November. This is due to the lockdowns that took place following the rise in coronavirus cases. So this is one of the main events that we have to watch out for, especially also with the euro dollar rising towards above 120. So this could be another highlight to focus on. So moving to also to the United States, we have the consumer price index, which I was just talking about. A positive reading could just be positive to the dollar and positive to the US yields. So watch out for this reading because it's also very important. We have the press conference, the European Central Bank press conference also at the same time. And also we have the initial jobs claims, the weekly claims, which is expected to rise by 725,000 after rising by 712,000 during the past week. So these are the key numbers for Thursday. Or for Friday, it's a bit shy in the European session. Moving ahead of the US, we have the producer price index, also one of the important numbers for inflation. And then Michigan consumer sentiment for December, which is expected to slightly move lower to 76.5 from 76.9. And then we end the week with the US Baker Hughes oil rig count. So these are the key economic indicators and events that will be released or will be taking place this week. Now let's move to the MetaTrader 4 platform to check some price patterns that are being formed. So going to the euro dollar, going to the daily chart. So it's very clear movement for the euro dollar. We're able to rise towards 2170, its highest level since almost April 2018. So this is just a strong rally. We can see here how the market just on the bigger picture, we had a bounce from this moving average and then moved here. So on the bigger picture, to just highlight some key levels, we have the 120 previous psychological level and previous stop. It's a threshold, it's a key number now, pivotal number. If we move back below it, it could mean we could be going to a bigger correction on this rally, especially as we get closer to the European Central Bank meeting. 121.70 previous high, and next resistance at almost 22.30, 22.20. This area here could be filled with selling orders. If we go to the hourly chart, you can see that the recent move, the whole recent move, was just a channel that we are currently trading at, where you can continue trading this channel in the coming days if things remain the same on the fundamental side. So this is just for the euro dollar. These are the key levels. You can see the previous stop and then the top of the channel if we're gonna retest it during this week. And we're just getting closer to the 100-hour exponential moving average where we had the bounce today. So these are the key levels if you are trading the euro against the United States dollar. Moving to the British pound against the dollar. Currently, we're just retesting a key area, 33.10, 132.85. So this was a key area previously. You can see here how many times we found resistance, 1 and 2 times. We found resistance twice, and then support 1, 2, 3, 4, 135 until we were able to break below it today. So this is just a key area. If we trade back above it, it's just bullish again. However, to have a clearer look on a bullish headline, definitely on bullish headlines from Brexit talks, this would need a push above 134 to have the chances of a retest of above 35. As long as we're below this area here, we're posed to further downside, maybe towards the previous support zone of 131. Could be the coming possible support zone ahead of the 129 key level, 129, 128. 50. Remember this area here, it was a key area previously. So how many times we found support near this region? I'm just going to draw it. You can see how many times we bounced back up these numbers. So on a very better scenario, we could be falling again to these levels here. So definitely the British pound against the dollar is just subjective to any changes based on the Brexit talks. The dollar against the Japanese yen, if we go to the daily chart, we can see we're still in the same momentum, same movement. If we get closer to the H4 chart, we're just trading inside a key range for a while. 104.75, 103.65, a drop below it could just lead us towards a directional move below 103.16, while an extension to the upside could just drive us towards 105.65. If we're just going to have some changes in US yields, this is definitely going to weigh also on the dollar against the yen, maybe leading to a directional move. The dollar against the Swiss franc on the daily chart, just were able to trade trade lower again. If we just have to draw these lines here, you'd be just trading sideways for a while on the for the future if we don't expect further selling for the dollar against the Swiss franc. We just want to look for previous resistance, for previous support zones. We could be having like key support on the previous bottom, which is almost near 86.75, which is almost 225 pips away. So this is just a big on a bigger target. While I move back above the previous support zone on the bigger scale of 92 is just bullish again. We're gonna go for a bigger scale chart. If we want to look on the intradays or maybe even like smaller time frame charts, moving back above 0.9, 0.89, 85, which was previously key support, is just bullish again for the pair. So these are the key levels if you are trading the dollar against the Swiss franc. The Australian dollar against the United States dollar. So following this move, the peak here, we're able to do another high, almost same formation, so a high and another high, a higher one. If we just want to highlight some previous resistance zones, you can just pinpoint this previous support, which could turn into previous into coming resistance. It's almost near 75 level. This is on the bigger picture, and then to another higher level of 76, 78 on an extremely bullish scenario for the Australian dollar. Well, if we have a reversal here, witness some risk-off sentiment, which could drive prices lower. We have a 73.40. It's a key level that was previously a resistance and then support. I'm just going to show it on the hourly chart. You can see how much this level is just key for traders. You can see how many times here we found the resistance near this area, while also dropping here was a solid base for this move or this rally higher. So now we're just closing in again to the trend line, combining these bottoms, which is also so close to the 200-hour exponential moving average. So breaking back below 73.40 is bearish again for the pair and drive the prices lower towards 72.50, 72.40 support area. So somewhere here between 72.20 and 72.60. The New Zealand dollar against the US dollar, following support today, found at 70 psychological level. We just bounced higher again. So this is definitely on the another zone we can highlight 69.45 as another key support. It was resistance and then a support previously. So this is just important level on the downside. While a move back higher above 70.50, which was the previous top, or even 70.85 could just lead to another move higher, another spike higher for the New Zealand dollar against the United States dollar. The US dollar against the Canadian dollar was among this pair was among the key movers this week. I'm just gonna remove all these lines so we can start fresh. So if we go to the daily chart, you can see that we found support exactly near the previous bottom here. So the market bounced earlier today from this bottom. So you can see how here it is. If we just want to have other levels, so you can just go to the weekly chart to just check where could be the possible coming support zone if we were opposed to break below 2770. This is just on the bigger picture, 2530 to 124.80. So this could be the coming support if we're able to break below this. However, a move back above the previous support of 129.50, 130 could just be bullish to the pair again. Maybe we could push higher towards 130, 130, which was also on the hourly chart was previous top and key resistance for a while, 3170, 3130. You can see here the sideways movement that was capped by 3120. This area between 3120 and 3170 could act as resistance. This is on the medium run. Gold prices following this sharp move lower and then the rebound. You can just highlight the support, previous support 1848. You can see how the market rebounded exactly from this area. So this area, which was support at the time, turned to be resistance at the time. So this is just the bigger range that we are trading in. 1765, 1850, 1848. This is a bigger range. We're now trading sideways. If we just want to go closer, you can see maybe we're having like a sideways move here, which could be a continuation pattern. However, we need to denote and highlight this support zone here between 1817 and 1823. Any break below it could just drive the prices back lower towards 1800 and maybe even lower. However, if we stay above here, if this area holds, we could be poised to retesting the 200-day exponential moving average, which currently sits at 1860 almost. Silver, following this sharp rebound, we're just trading sideways. So on the H4 chart, it's very clear this is sideways trading, a range between 2350 and 2440 almost. So this is a 90 cents range that we're currently trading at until we have a clearer drivers. You can just draw the trend line combining the previous stops. So watch out for any rebound and the testing for this key trend line. A break below 2350 could just open the way for further losses towards 2260, while a move above 2440 could just take us higher towards 25 and the break of this trend line, maybe even higher. The WTI, so following the OPEC meeting last week, OPEC plus meeting, prices succeeded in rallying a bit, but still it's a bit shy. You can see on the daily chart, this is just wicks to the upside, but still we're like lacking a clear direction and move following the meeting. So if we just go closer towards the H4 chart or H1 chart, you can see that we're possibly having like it's still too early to talk about, but possible if the economic sentiment will worsen, it's possible that we could be having it's either a double top formation or just a retest to this sideways trading, and then we trade inside the range between 43 and 47 for a while, so we can be poised for trading sideways here. So this is just going to be dependent on any headlines regarding oil or any headlines regarding the economic activity on the longer run. Definitely all the headlines related to vaccines that are bullish could push oil prices higher again, since they could mean that the economic activity is back to normal. It could be back to normal soon, and this could push also demand levels higher. However, any disappointing headlines could weigh on oil again. For now, on the bigger picture, we're just stuck inside a certain range. So you can see following this sharp rally to the upside, we're just trading sideways up inside this range. If I want to go closer to, you can just draw these trend lines combining the previous tops and bottoms. You can see that we're consolidating inside similar wedge to a triangle formation. So we definitely need to break out of this zone to check where it could be going. This 100 H4 exponential moving average is just moving along with the trend line, making it a possible point if the market wants to correct lower, so making it a possible support ahead of another break, maybe lower towards the 200 H4 exponential moving average. So these lines could be moving like this, and then maybe the price could be moving like this, and then lower on a bearish case scenario. Or on a bullish case scenario, we could just be poised towards having another higher high. Maybe you can just go for certain expectations. You can just draw a possible channel, or maybe just expect another push higher, maybe towards 31,000 on the longer run. So these are the key levels if you are trading the Dow Jones. This is all for today's session. If you have any questions, please write them down. I'd just like to remind you that all the information, news, analysis, and opinions mentioned in this week ahead, they're only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. So if you have any questions, please write them down. Perfect. I believe this is it for today. I wish you all successful trading throughout the week, and if you need any help, you can reach us at webinar@icm.com or support@icm.com, and we'll be glad to help you. This is all for now. Thank you all for joining.